experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, in tonight's video, we'll talk about the drama that was never to be on the whole Trump-Greenland deal and what's next for the markets as we move toward the Fed meeting and much more. Let's get into tonight's video. Welcome, everyone. Sorry about last night and all the technical issues, and it's just been continuing. I had a major internet outage, but all the drama is behind me, it looks like. So hopefully we'll have a nice, clean stream tonight. Well, everybody was expecting all these disasters around Greenland, and folks where I saw even in the channel, people were talking about Trump's a taco. Here we are, another taco trade. I keep telling everybody, don't be a lazy investor. Do homework. You can watch this channel, gain some insight, but do your homework. I saw somebody go, is there a summary page for the art of the deal? Just read the book. It's like that thick. You should be able to do it in one day. It's not that big of a deal, but the tactics are always the same that Trump puts out there. And it's interesting because if any of this is real, I haven't had a chance to do this and get into it, but it looks like this is what I'm seeing. Denmark has to keep paying population $600 million a year. They're going to maintain their status. USA gets sovereignty over whichever parts they want for U.S. military. Reading this off another screen here. USA gets mineral rights. China and Russia aren't allowed in Greenland. Cost zero. So if that's true, that's pretty amazing. And so I'm not going to go in and talk about the art of the deal. Read the book. Read it many years ago. And there's things that work incredibly well. And what Trump did was to throw a bunch of stuff up against the wall, let everybody blow up. And then he gets there and says, okay, let's make a deal. Let's talk about it. You know, and that's what he did. That's what you watched him do. Everybody, oh, Trump backed down. He's so much better than all of us when it comes to a deal, and especially with the power that he has. So enjoy what we got out of this, and I think was overall a positive. We'll see if what I just read to you is real. It is off X, so it may or may not be. But not to mention that I think murders I'm looking at here were down over 20% in a year. So a lot of things have happened along the lines of the new golden era. So let's talk about some things that, let's go through some of the things I was attempting to talk to you about last night before we had the technical issues. But, we're looking at, PCE came in pretty much better than expected across the board. So inflation is there. It's always going to be there. In fact, I don't even think the economy can work without inflation. That's why they always go 2%. But if you compound 2%, you could see what that looks like. You can go into TradingView and just put in, the PCE, but look at the pure numbers, not at the year-over-year percentages. I've talked to you folks a whole bunch of times about this book that has been out there since, I believe, 1953 called How to Lie Through Statistics. Anytime somebody says this murder rate down 20%, anytime anybody is using percentages it's a method to enhance the outcome. So if you said, it's up 100% from last year, but last year was 5 and now you made $10, so I'm up 100%. It sounds a lot better 100% than you made $5 more. So just know that there's a lot of deception, especially a lot of influencers that talk about I'm up, 122% on my account. Well, they only had, 10,000 in the account. So, and now they're at 22. So don't buy into the percentage. As soon as I see somebody rattling off all these percentages, how better or worse, I immediately, the red flag goes up. Give me the numbers. Let's compare the numbers and how those look relative to the percentages. So enough of that. So PCE came in a little better. I'm just looking through some things that the claims were at 200,000. So that we've been running 225, 240 for better part of 2 years. And the continuing claims was down again as well. So we're seeing labor markets continuing to improve. And it's pretty much the opposite of what all the mainstream financial media, you can't even listen to Bloomberg. They just spend all day just anti-Trump. They're not even really talking. Like I said, they have this thing, power. The show's 3 hours during market hours. They're not even talking about markets. They're talking politics during the day. So I guess I would think at least CNBC is a better option there, just if you want to listen to that stuff. I turned the sound off. I have it on right now. I love some of the prints that they put up there, markets. I can just see what's coming on in the marketplace. So I would say it's okay to watch CNBC or Bloomberg as long as the sound is off. You're in good shape. Occasionally they'll have a guest on there. Just looking at what else. Personal spending was up, was a little better. So all the metrics that you'd want to see around labor continues to be pretty good. I'm just waiting as usual so we're going to go back to the format that we usually do from the standpoint of going through the database, and then next we'll go through all the futures on S&P and NASDAQ and so forth. We'll bring up the IWM. I really need to put something up together, but I've got our portfolio expert product up here. So let's go ahead and just go over there and just real quick. So what I've got here, one of the things you can do with our portfolio expert platform, you can see here that we've got a browser embedded here. It's kind of an old browser, but it works with our WaveTech. So I've embedded WaveTech right within in here, and I can just double click this here and make a full screen presentation here. So let's go ahead and just go through the database here. All right, so we were at 51% yesterday. We're now at 54% at the moment. You'll see we have bullish rotation here from pretty strong. We had about almost 900 new buys and only about 200 sells. So got a big 4.5 plus ratio on the bullish side, which means there's 4.5 times the number of buying versus selling. So as we take a little deeper view here, we're looking at all the daily models here for sectors. So we have basic materials and still up 15%, getting fairly mature, but most of these items in the database are actually not that mature just yet. There's something I did want to show you. Those of you that were in, let me just look here. Yeah, so we had the old trading room that I had going back to, I think it was 23 when I did the live trading room, and we built a portfolio back in those days. Some of you that were in that room may remember we built basically a trading room miners, and I want to. So we brought up a bunch of stocks. Everybody was saying, "Hey, I think this stock should be in there." So we built a community portfolio, and it was all the miners. And I can show you some of the stocks, but I want you to look at the explosion that this has had. Let me bring this full screen for you. You can see exactly. So it just meandered around as we came into. It broke out as we came into early 26, and this is all the minor stocks that finally started to explode. So the reason why I'm showing you this tonight is I'm thinking out loud as I was prepping for the show tonight, and I was thinking, we should build some community portfolios like this, and I think I should highlight them at least once a week, and things like that. It'd be kind of an interesting. It would give you the ability to cherry pick the portfolios and all that. But I think I want to put that together. So we'll probably do something with the Discord community. Maybe we'll expand it out. I'm going to get something going. And like once a week, we'll have a meeting, just a brief meeting. And maybe it'll be an hour, but it'll be building portfolios for Wave Tech and for Portfolio Expert. And I think that would be a very interesting way to go, because you can see you can see all these portfolios. These are that particular portfolio this year in the first month is up 22% right now. Let me zoom in on that so you can see up here the trading room. Let me move that over. There you go. Trading room miners is 23.35, and there's some other even this defense portfolio, Aero Defense, all these are up 13+%. This is 1 month returns just off of these models. So let's do this real quick. Let's take a look of the active symbols in this portfolio. Okay, there. I'm just trying to get this to float on. Yeah, so these are, I'm sorry. I'm trying to do something here that's not working from the standpoint of what I was trying to do. But anyway, we'll come up with this list. It's down at the bottom. I can't find a way to get it up there. I'll get it together, but I'll read you off some of the symbols that are in here. Yeah, I noticed Meet Kevin's ETF that he had years ago. I told him I could help him a lot get that thing going, and now it's closed. It's unfortunate that he didn't embrace me a little bit on this. That's my world, is the portfolio world. I know I come on here and talk about all of the individual symbols and indexes is pretty much what I do, but this is the world. Even these clean energy portfolios right now are working. It's kind of interesting what's working out there. But these are all 1 month performance year to date, which is not quite a month, a few more days to go, but another week. But anyway, these trading room miners, if you would even comment, and I'm going to invite you to send me even a Discord message, go into Discord into the live chat room, and tell me what you think about the idea. If you see this video on maybe putting some community portfolios together, a couple of things would happen from doing this. Come back on screen for a minute. And what will happen is it will get us engaged, because I'm going to set up, hopefully this weekend, there's 3 things that are going to happen. I'm going to finally get that ebook out that I've been working on for the better part of the month right now, get the annual report out, and then I'm going to hopefully get the Discord should be real simple to rebuild. The new Discord is going to be very simple. There's way too many rooms in the old Discord, and I will be hopefully having a meeting, if possible, tomorrow. So if you're on Discord, make sure I'll send a message out to everybody, and we'll go into the trading room where we can actually show screens and talk. Everybody can talk and all that. So we'll do that tomorrow, because I want to kick this off as we come into the new month. I want to get a lot of this stuff cleaned up. I've had some monster projects going on behind me, and hopefully we'll get, I'm coming to the end of a whole lot of stuff right now, thank God. So anyway, but little side here. So let's go ahead and just see if there's, let me go back to the screen here. So we are now back at 54.2% where my cursor is, long in the database. This is really starting to get some pretty decent traction. And it's interesting because I've been kind of beaten on, I guess, market psychology. I feel like there's a material amount of, there's been a big switch over the last maybe couple years, but maybe a little bit longer. In the past, I've been around the markets a long time. Retail was always discounted as a joke. And people look at the AAII numbers for bullish, bearish numbers and use it usually as a contrary indicator. This is no longer the case. The retail, in my opinion, has become a material piece of the market. So all you folks that are not institutional, I know I do have some institutional folks watching, but the power is actually in the hands of retail often. The roles switch all the time. And I think that number is going to get bigger. We get all the market tokenized and maybe get on the chain. Whole lot of stuff is going to change. I've been around for a long time, so they were still writing little pieces of paper tickets and walking with humans going into a trading pit and everybody yelling and screaming and executed. That's where I started from. And then bringing the orders back out to, getting digital. And before that happened, we really got to decimalization before that. And then digital, they kind of came right together, but the world is different. The markets are different. The reaction time is different. And I've watched a lot of evolution in the markets going from literally not paper trading from a sim, but paper trading from writing tickets. It used to take better part, if you were outside of New York and you were putting an order in, it could take you 20 minutes to get back a fill on a market order. By the time it was passed through multiple hands and back, and somebody typed out and physically sent it to your location, if you were in a brokerage firm network or something like that, to instant fills, your account's updating instantly, everything's real time. That was not like there was end of day, key punch. All the computers would run and update your account based on last trade of the day. That's all you had. Now you got real time equity by the moment and liquidity by the moment, right? So you could sell and rebuy and, in an instant where that wasn't possible. I mean, there was 7-day settlement at one stage, so it took 7 days for your money to settle and get all your buying power back. So it was a whole different world from what we live in. But but what we're seeing here, just back to market analysis, is what we're seeing is very good traction on the short term. Tomorrow, I won't be on screen again until after all this happens. But tomorrow is where we'll get these numbers to come out. So we'll get the intermediate. Right now, intermediate is at 65.94. I'm expecting that number to get bigger. I'm expecting the forward-looking part of the market to get even more material as far as suggesting longer expectations for the trend to continue. And as I said the other day when we were down and everybody was worried about tariffs in Greenland and Trump shutting down NATO, it's just funny how far they take it. Trump knows how to work up, get everybody just leaning the wrong way, and then comes in and trades. I used to trade a lot of gold in 1980 and the big boom in 80. I had a hotline to the pit, a quick story here. And there was a big trader, a guy named Toby. He traded for Drexel. Most of you people never even heard that name. So, but he was a big trader, and he was trading for a big group out of London, out of the people that made the London gold fix every day. And he would come in, and everybody on the ARB phones and everything, which I was on, would be screaming, Toby's buying, and he would buy, and he'd get the whole world out. That word would get out. Things happen slower, and everybody leans to the buy side. And as soon as the pit gets full of buy orders, everybody with their hands facing, going, give it to me, he would put out this big order, and he would like sell the entire pit, like sell everything. So he bid the market to get everybody to lean to the buy side, only to take all those bids and sell them all because he really wanted to be short. And he was a master at this. And that's who Trump is. He's the guy that gets everybody working. He's doing this, all this stuff. And then he does the opposite. And that's why they call the whole taco trade, right? I've seen this happen in open outcry markets and other pits, so it's an interesting world we live in. But Trump's he's the guy that can get all the suckers that show up. It's just amazing. It's laughable. All right, so let's move on. Let's go ahead and go to, let me just go over here. So all of this stuff I was just showing you, by the way, Portfolio Expert only runs PC. It doesn't run Mac. So I'm actually sharing my screen from there. And what I can do here is I can switch over. This is a live view of TradeStation. This is my day trading scalper setup that I use. Some of you have seen this before. So all of this is in the TradingView indicators, by the way. You can get all these. This is the webs right here. And this is the market grid. And then the only thing with TradeStation, I don't have the algos. So I'll flash back and forth with the algos to see what usually the 5 minute is projecting for market direction. One day I'll do a whole session just on day trading and how to set up, how to use the indicators along with a trading platform like this. Okay, I've actually been a TradeStation. There's actual code that I put together in 1990 that's embedded in some of the user studies in TradeStation. We were the very first solution provider, and so back in 1990 it was when we did that. So yeah, a long time ago. But there's still some of those user studies in there. In fact, I was on Bill Cruz and his brother, who were the original founders, that they used my stuff. They tried to act like that they didn't, but anyway, enough. So let's go ahead and let's go to the daily S&P. I should be able to roll through this stuff pretty quick. I'd like to get to some of the questions. Hopefully I triggered some good questions. We'll do a little chat at the end of this live stream, but let me get through this and just see if we can. So this whole sequence of the last few days, right here, I'm gonna zoom in a little bit. This little bar that closed under this orange line, that was our STX buy. We opened unchanged. We went through that low by a little bit, got a monster reversal, traded up to RTX, which is the extreme projected. These orange lines are extremes for each day. And as I was telling you last night, I know we got through some of this before everything locked up. I did clean the machine completely, so we shouldn't have any issues like that. But this is what I was talking about. You can see we're being forecasted to come back above the the moving averages again. I talked about that last night, but there's not, I don't think we're going vertical. When we got this sell off, we killed these Fibonacci targets right here. So those are no longer valid. We're basically in a flat line. It looks like we're going to get some appreciation possibilities coming into around February 3rd. So in the end of next week, I think that is. I'm not sure how the days are falling. But then we're just looking at flat. So this is what I've been, if we go back to October, let me draw something in here. So if we come back here to October, this is late October. And if we draw underneath, this is the trading band that we have been in. Hang on a second here. This tool only, bear with me. Okay, let me try again. Sorry, this tool locks the screen so I can't change anything. All right, so this, I see what's happening. Hang on 1 second. You folks aren't able to see what I need you to see. The scaling got messed up somehow. So bear with me. It's always something, right? All right, now you'll be able to see it. Let's put the tool back up. So this band, that's other than this dip underneath here, we've been locked in this range. This, some folks are like, well, I thought we were range bound. We went down here. You can see it snap back. This is a daily chart. So we were underneath there like 5 sessions, and then we're right back into this band. And this band is been locked in. I think what we're looking at is just coming back to the upper band. I don't think we're ready to roar into new highs. You can see the algo predictions is a rally into the beginning of the month and then a fall back and then everything flatlining again. So I'm not sure there's any reason to think there's going to be much different going on as we go forward. The S&P is just going to be locked in range. Folks, this just makes for an amazing trading setup. Buy low, sell high. That little box I put up there, you can kind of figure out when we're down below that. We were down below that at the bottom end just a couple of days ago. Reversal back into the range. And that's going to continue mainly because of the weighting of the S&P is going to cause this. You know, we need to do a whole session just going through stocks, especially going through maybe the top end of the S&P, which is driving things. And I am going to go through how we doing on time. Pretty good. I will go through, you know, the Russell, and we'll talk a little bit about what's going on there. I still need to get, I may have a chart. I don't have it. I'm thinking I had a chart set up for the spread. I need to set up a spread chart so we can go through and look at the differential charts and things of that with the Russell. There's definitely rotation. It's probably 2 weeks ago I started talking about the rotation is on. Now what we're seeing is this sideways range with the Russell getting some traction is going to allow that spread to work. So that's definitely in play here. We'll look through that here in a minute. But you can see this is what's set up. And I should be able just to kind of touch on the NASDAQ, show you the same pattern. So NASDAQ's got a little more strength, but same dates. Everything right now is being forecast to kind of peak out in momentum. That doesn't mean that's necessarily the top where the peak momentum is. Oftentimes, peak momentum, there's still another 20% to go in the trend. So, folks, that's probably if there's mistakes made using these PPMs, the fact that they're being forecasted down, I can come way over here. I'm trying to see where it goes negative. Yeah, it doesn't go negative here until like the end of the first week of February. So what we're seeing here then is another flat line projection, just like with the S&P. Might be something that comes out, you know, we've got a Fed meeting, we got some other stuff. I think Powell doesn't do anything at all. I think he freezes things the best he could. Trump could fire him, he wouldn't be there from last year. He would have already been gone. So we're kind of stuck with him. I've talked to you a lot because I went through some interest rates. Hopefully this all stuck with a lot of you that saw that part. But what I've been talking about is it's not so much the level of interest rates, it's the structure. And that's why we need a steepening curve. If you look at the curve, you see we're way up at 475, 485 on the 30. Nobody does anything with the 30 anymore. It's immaterial. It's kind of a bastard yield. Back when I first started in markets in 79, everything was based on the 30. So now even a 30-year mortgage is based on the 10 years treasuries. So I know they're always pushing this 2-10 spectrum. I don't care about the twos. I really don't. The main focus is from the 1 year down to Fed funds overnight to the top end. That steepening is where I'm looking for 125 basis points. Ultimately, we get that. Then the Russell really takes off. Right now, we've got, when you look at the yield curve, you've got a steepener out there. Okay. So let's do, let's take a quick look. I am going to bring up the 10-year for a minute here. But you can see the spike we had the other day. So I showed this to you, I think last night. Last night got kind of disrupted by everything locking up. But there's three objectives, and we've had these before. 444, just trying to look at it, 445. This is 440, and we've hit just about the 432. I think we might have printed 432. Yeah, we printed 31. So this has been hit, Fib 1. Usually Fib 1, Fib 2 are the main targets. And you can see we're trying to get into a consolidation from the standpoint of the red dots are projecting, holding above the 10, and then moving a little bit higher. Can we get up to 440? It's certainly possible. That goes to the extreme range that I've been projecting. That is basically 395 to 325 is the range we're printing, just right at 425 right now. And you're going to get spikes above and below those levels. And I think I went through a pretty good analysis the other day with the monthly, trying to get you into expectation ranges. Nothing in this back end, not the Japanese bonds, not anything is going to blow up this back end of the curve right now. It's very, very stable. And, you know, I think it's kind of funny. I don't know if these people on YouTube channel are, you know, from Europe or where they're from. It's like, well, what is the U.S. going to do when Europe sells all their fund, all their T-bills and all their treasuries? What are they going to buy instead of them? Where's that money going? There's no market big enough. This is, I think, just a quick comment about there's no other market bigger enough because of the debt. The U.S. debt is a blessing to the planet right now because there's a place to put money, use collateral. You know, you can borrow 80% against these things. That's how much confidence is in there. You go on margin on your stocks, you're not going to get anywhere near that. back when I was a market maker, I mean, we could do 90% against our stocks. So we could do all kinds of crazy strategies that you couldn't do as a retail guy, because I used to joke that membership has its privileges. That was the old American Express line. And it did. I mean, we had more leverage available, and now and today you can get leverage in different places. So there's different facilities from what's typical. But the bottom line is there's nowhere else to park the money. That's big enough. It's not Bitcoin. That's a measly, what, $2 trillion market. Bitcoin's a joke on the planet from an asset that you can use for anything. And you're not going to get a marginal buyer, which is the people that are controlling all the pricing and all the markets right now, to come in with a lot of money. It's just not going to happen. It looks like they're still selling. But the point is that there's plenty of places. So no one's going to liquidate treasuries. The bond vigilantes aren't going to destroy the market and push up yields, even though we got projections. I think I brought up the monthly, and there's projections up in 5.5 range. But those are pretty much phantom projections that come out of the algos, and they're just Fibonacci sequences that are being projected into the future. It's unfortunate that a lot of folks don't validate. They just draw trend lines and look at a high-low, do the Fibonacci projections, and then tell you as if this will happen because they drew a trend line and they pulled a couple points off the chart. And that's why most everything you see out there wrong. You need to have ability. The nice thing with the algos, with the PPMs, which are basically momentum that's being derived through the moving averages, not through a closing daily price, looking at acceleration of trends and those type of things. I showed you a bit of the probability chart last night, but this is all, this is just a huge market. It's not going anywhere. No one's going to liquidate it tomorrow. So when you hear that stuff, turn the page. Just keep turning. Okay? Not that there can't be a big treasury decline, but there's plenty of money to buy this stuff. They can't get enough. And even there's a lot of levered environments that are using treasuries for collateral. And so it's not going away. So put that thought out of your mind. Let's go ahead and let's do gold, which is, I think, print a new high again today. Yep, we got a new high here, 4,970. I'll cover silver here in a minute as well. So when we look, we're trying to hit fib target 2. Just was talking, I don't know when it was, last week or whatever, about fib target 1. They'll be on the far right hand side where my cursor is over here with this box that's highlighting. So 4870 is fib 1, 5,095, 5233 is where these are being projected right now. And I showed you this chart, this is the daily, which has got a crazy, insane angle of attack being projected into the future. But if we go to monthly or weekly, it gets more insane. Look at this. So I need to throw some reverse fundamentals on this, and why is this happening, and why does Bitcoin look the opposite? Supposedly Bitcoin was digital gold, which is a joke. Listen, the only thing that drives Bitcoin is you being the bag man stupid enough to pay up. And anymore, it doesn't look like anybody wants to pay up for Bitcoin. I still think there's a lot of potential risk. We'll cover that in just a minute here. But you look at these angle of attack, these things this is huge. These are huge trends, and they're mega trends. They're not something, and I remember showing back when we were down in this consolidation, if I did a replay, this angle has been being projected for years. This isn't something new. And so, gold is a good buy and hold. There's some trading to be done in these ranges, but this thing is ballistic. So let's go ahead while I'm doing this. Let's just go to silver real quick. Look at this. Silver's more insane. Let me pull this down. So it's not showing any rounding off until we get up at $150. And this is a weekly. So right here, I'm just putting my cursor right here. That's October of next year. So that's it. No, I take that back. That's October of this year. It's 26. Let's do something more insane. This is the monthly chart. 165, 170 range. Way out here. But look at this vertical move. And this is the thing I want to point out, though, and this is what I was saying earlier. When you get these insane projections, you have to go and look at the momentum. So momentum doesn't peak based on this until February. Even though the momentum peak is there, the trends will at least experience another 20 to 40%. And at this trend level, which has not ever been seen before, okay? Let me see how far back this chart goes. So this is back to 1999. We need a longer chart than this. But you can see we've never had, there was a previous spike was back in 2010 after the GFC, and now we're into this parabolic move. It is projecting, what's interesting here, right? Let me blow this out so we can get a better look at this. The only cautions here, and they're not that big, is that we are potentially getting an inverted V top. And what that means is that's the top of the momentum I'm talking. And this goes to every market you look at, 1 minute, 5 minute, any time series you want. When you see this, when you hit the peak of these indicators isn't the peak of the market. And you don't, a lot of times you don't get like a typical, inversion where you get the right shoulder, where you get the divergence top. Very seldom these indicators don't operate under those same rules of like an RSI. Any 0 to 100 meters, stochastics, RSI, those type of things, those things max out at some stage, and then they'll get things, oh, hang on. It grabbed me away. So, but any of these things you get, so quick lesson embedded here is that even though you get a peak in momentum, especially if you're using my PPMs, which are price pressure momentums, that is not the top of the price. And we could go into that, what I call where this V happens, and then we go into that sideways move, which is trend maintenance mode. This is a trend, not that we've never seen these kind of numbers before, but we're 14, PPM1 right now is 14.65. 0.25, to put this in perspective, 0.25 is a trend. So this is like, what, 30 times bigger trend than a 0.25, whatever the number works out to be. It's matter of fact, it's probably 50 times because it's 0.25, that's a quarter. So every basis point, and I showed you guys the probability chart last night. This is in the classification of a parabolic curve. And they are, best of my knowledge, impossible or to actually predict where they end. So these markets, these are runaway markets. And this, if we inverted this chart, it's a cliff, right? Just straight down. It's a waterfall. It's an inverse waterfall. It's going straight up. So these things will peak. It's going to take a while, like multiple months, to burn off this. I mean, maybe a whole year to burn off this upward momentum. So this 10-month moving averages, 40 with 10-month, 40-week will be like the main. Probably the 40-week will be easier to target where this thing is at least going to. That will, when it hits that number, it will be a buy again. And my expectation is it will bleed off just going sideways. But these type of trends, just so you know, are unpredictable. If I were to go, I heard people, it's 105 will be the top, maybe, but it's just a guess. You have to know you're just guessing. And a lot of times when there's certain elements available in the trend, you can actually tie it down fairly good. But if you start off at this high level series, like a monthly, and you go to a weekly and a daily, and maybe even go 4-hour or 1-hour charts, trying to get those to consolidate to give you the answer is very, very difficult to predict those things. And with the power, just go on for these trends, the power of the underlying trend when it gets at this level, forget predicting. You want to be a hero picking the high, good luck. You might be able to catch some snapbacks, but this is beyond NVIDIA maybe, what we're seeing develop here. So, but we are seeing the peak value coming. Once the peak comes, then you'll get the decline into the trend mode, what I call trend maintenance mode, and at some period of time down to trend maintenance. So since this is a monthly chart, I can carry you into 2030 by the time this thing resolves itself. Just so you know, this is a mega trend, a super cycle in Elliott terms, without a doubt. How it acts is, I think there'll be a period of time we get monster volatility. That's probably just going to be a hesitation before maybe a next level high. But looking at the analysis as we see it right now, the only thing that is likely will be a minor top with a consolidation and going through that time series, going top down monthly, weekly, daily, maybe into a 4-hour or hourly chart. You might be able to narrow this down. So a little lesson embedded in the analysis. How am I doing? Good. I got 15 minutes. So yeah, let's go ahead and go to Bitcoin. And this is, matter of fact, I'm glad I left this up. So back in 2023, May 1st, 2023, this is a monthly Bitcoin. The prices that were being projected were 80,000, 105, 120, 634. And I remember covering this because I've covered Bitcoin for years, for probably 5 years now on the channel. And I remember going, I've got to acknowledge these projections, because anytime they come, I need to do that. And then there was this red line I've got my cursor on right now. That was a pivot. So when we broke above that level, which was 52,800, that was the blast off stage. That's when we got above here on, this was February 24, when we broke above that and closed this a monthly chart, then that validated all three of these upward targets, 80,000, 105, 120. And I remember we got to this first level, we reacted off that, we came back to the 10 period moving average, we got one more new high. And I just want to comment on this whole 4-year cycle thing, which is complete BS. What I've got on the screen here is basically, let me just see what I can get. Yeah, so right here, what I've got on the screen is the entire history of this financial asset. That's it, the entire history. This is way to start to establish things like 4-year cycles. The fact that it's happened it's happened before does not validate it. There's a lot more to validating cycles. You need probably a 4-year cycle is going to need, I'm going to go with maybe 20, 30, 40 years of data to be able to come up with the actual being able to validate a cycle of that level. A few hits doesn't really matter. And, and then the whole, you see all kinds of crazy stuff. Listen, 90% of everybody you see talking about Bitcoin knows nothing. I don't know anything. All I know is, what I do know is the characteristics of the charts, but I also know these are my indicators. These aren't me using MACD or RSI. I developed these for a very specific purpose back in actually, these were probably 1983, early 83, when we developed this concept and started developing the concept of angle of attack. Because listen, whenever you actually develop something, you have to ask the right questions about, what's the question, and then you have to kind of work to figure out the answer. And so we had lots of markets with lots of history back in those days, and we started looking at the moving averages, trying to figure out when were they, you see market trade down to a moving average when it bounces off. When was that? What were the characteristics of that event? What were the characteristics when it didn't stop at the moving average and went through? So basically, it was two things were important. Is that I didn't make up the line, otherwise I didn't decide that angle of attack through a trend line, and we had this old guy that used to come in to our office in the early 80s, and he had the prettiest Dow Jones chart you ever seen in your life. That thing was 6 foot long and 4 foot high, and he would add paper onto it, but he had all these trend lines, and there were trend lines all over the place. And he used to come in and he'd go, oh, the wrong trend line. So I didn't want to have anything to do with trend lines. I wanted moving averages that were being just part of a natural math to make an analysis of and add probabilities. And I didn't draw them. So I try to keep everything as non-subjective as I can. So that's why it wasn't just simple averages. Didn't have to be. Everybody's been trying to find an edge on moving averages. All they needed to do is have these PPMs and understand the probability factors, and they were done. Okay. So anyway, lots of lessons tonight, folks. But let's go to Bitcoin, and I really have to get this thing out I've been telling you about for a while. It's really just understanding it's a lesson in market psychology. So this is what's driving everybody nuts. Let me see here. Make sure I got Bitcoin up. Getting pretty close to another little bottom in Bitcoin. So I'm going to scream here another successful test here. We got down to 88. I told you 83.8 is the big pivot number. You take that out, you're making new lows. You're going to 77 or lower. Right now that hasn't happened. Somebody go, Bob said it was going to 77. I did not. I said if it breaks through 83,800, there's going to be a retest of the 80,000 level, and chances are that level won't matter if that happens. So far, we've got another successful retest coming down into this, close into this mid 85,000 level. So we're staying above that level. There's still some biases on the upside. You can see the algos are trying to turn up. And it's interesting, everything's pointing to the end of the month, end of this month of January, and into the first week of February. I'm seeing a lot of potential peaks in these markets at those levels. So I'm just trying to pin out a picture. There's some key points to pay extra attention to. Otherwise, keep buying low, selling high, especially on the market index. We're just staying in that range. So try to establish those range. If you have the indicators, then you just look for these turning points here. This is a potential V bottom, not a clean one, but at least there seems to be a momentum turn coming as we come in, into next Monday, we'll call it. And of course, like I said, we got Fed, we got some stuff coming here. So there's certainly some validation for some of these turning points that we're looking at. So a couple things here, and I'll go through some questions. So a couple things that you need to pay attention to, I think, as we come into the end of the month. The first month, a lot of the cliches will start coming out. As January goes, so does the year. looks like we're going to have an upward month. Maybe that's true. It doesn't always work. None of these things do. And I would just tell you to, if you haven't got the indicators, go to kendallreport.com/indicators, and you can add 24 on there. There will be, I'll put a description in this video tonight. You can click on the link there. There'll be a link there. The Substack, I went through some of the data sheets last night. I ran a data sheet for you. Those things are amazing as far as finding points, especially for day trading, in combination with the indicators and all that stuff. You can really set up some really good trades. Today was like a pretty good day, but some of the trades have happened overnight. You guys know I'm up late. I literally most days go to bed at 5 a.m. New York time every day. So I'm a late night trader. I have the newsletter. It comes out a few hours before the New York Open, and it works for me. I'd like to change my habits, but I have not been able to do that. Not as of yet. I've always been somewhat of a night owl. So whenever I go into Claude, it always tells me late night, or has all kinds of cliches it throws at me when I open up to run the AI. So anyway, there's that. Let me look and see what kind of questions you have. Yeah, somebody's asking about TradeStation indicators. Unfortunately, I used to have some things on TradeStation, took away their marketplace, so I have no way to distribute, only in Trading View and TV. So what I usually do is the way my room is set up here, should have a picture to show you, but I've got 5 screens here. I got a vertical screen here, and then up on top is my PC where TradeStation is. What I'm doing right now, when I put TradeStation up, let me just bring that up real quick. I'll show you. So something really got jacked up. I'm not sure. Oh, I see what's going on. Hang on. All right. Yeah, so this is what's usually above my screen, above me. So I have my PC on top, and then on the bottom is a Mac with three monitors. That's typically how I'm set up. So unfortunately, both our Portfolio Expert software and TradeStation is PC only. So I would have loved to be able to distribute these things, but they took it away on TradeStation. Yeah, I will definitely let you know on the London thing. I'm starting to get a little behind the power curve on there, because I'm going to need some time to market. I'm going to hopefully pre-sell the room, so I know there's a reason to come, and we'll figure out how to make it all work. That's funny. I'm sick of winning. Like that, Sam Birdwater. Bitcoin is fighting to stay alive. I'm going to give the Bitcoiners a lot of goodwill on fighting that mid-80s handle that keeps going on. That's interesting, Floyd, on the energy usage. Yeah, I don't like this part. I will say this. Trump is already telling the defense industry, no buybacks, reinvest in your businesses. I think I'm worried that he's going to put out some more of that on pharmaceuticals, because he wants and it should be, pharmaceuticals being made back here. He was talking about squeezing Macron at Davos the other day. And these guys need to be, we've been funding the world. Unfortunately, for the pharmaceutical guys, you're talking to a guy that has not been to like a doctor in 30 years. So I do a lot of naturopathic stuff and herbal stuff and try to eat well. So that's been my trick. I don't know how far it gets me. We'll find out. Yeah, cryptoverse, I agree with that. We need pharmacy stocks. I think if you can get some of these more natural cures out there, you guys might notice I don't wear corrective glasses. I'm 73, almost 74. And I don't have cataracts because I fix them naturally. Eye exercises and basically burning the cataracts off the back of my eye with what's called long ray sun waves. Kind of interesting. Let me just see what else you guys got going here. Yeah, I think, Floyd, I see what you said about what you developed with some Pine Script. That's good. The problem with MACD won't be, it might be helpful, but RSI, I don't know. Good luck. I mean, I did it the opposite way. I tried using that stuff. They were worthless. And I had to, we were more interested in trends than some of the scalping. But all you have to do to get some of that RSI effect is use a multi-series, go down the food chain in your series to shorter charts until it gets too noisy. Some markets, even like E-minis, trade quite well with these short duration. I use a 1 in 5 for trading. I very seldom look at anything else, but I'm also like, I talked to you folks about, I was around when the tape readers were disappearing, when the ticker tapes were being taken out of the office. I came in to the market at the very tail end, had the opportunity to meet an old timer that was a tape reader for like 20 or 30 years. That's all he did. And I use order book. I'll bring up the screen real quick. So I use the order book to trade off of, like reading tapes. And then I use my linear regressions and a market grid and indicators. But on TV, I'll put on another. These are usually what you're looking at now is on the monitor above me. It's still up there. I'm streaming it through something called PC remote. So I put it on the screen here. But the bottom line is, these are all the things I use. If it's day trading, longer term trading, it's probably, I think something that I will do soon is, a lot of times I'll do reviews and you guys ask me about stocks, and really all you need is WaveTech. There's 14,000 symbols in that product. And some of the mapping's a little bit off on some of the sectors, but not material. Just because the company's being bought out and symbols being stolen, some have been fixed, some haven't. But the bottom line is, just be too careful cluttering up even more things to look at. I'm working on it. I should be done fairly soon. I'm working on that script. I'm going to give you guys. Everybody has the indicators. If you paid, you have to own them. If you're doing the subscription or rent to own, when you finally, there'll be maybe a early membership or something, get these things. But this script I'm going to give you actually sets up swing set trades, does trailing stops. It looks at some of it's incorporating all the PPMs and the rules and PPMs. I actually used some of the rules from the trading models to put this together. So it's going to be pretty robust if you have the indicators. So that'll work out pretty good for you. Let me see what else you guys got out there. Yeah, I think another thing Floyd said, energy prices, uh, mining gets more expensive. Right now, uh, that there may be an issue there, but I think they're going to drill baby drill and bring all this stuff out in Venezuela, and that's a longer term project. That's 5 to 10 years to get anything real going out of there for sure. Let me just see what else we got here. Bear with me while I look through some of these. Yeah, who is that that's putting that out there? Yeah, I think the community building of portfolios would be awesome. I literally want to have where we revisit the portfolio and update symbols, scrutinize. And two things are going to happen. I'm going to record those. It's going to show people how to use the portfolio manager, and that's going to be big. And I've always told you, listen, I love the short-term trading, but the real money should be managed, through a true, not a risk management like a pie chart, but through dynamic management. And that's the way I've done it for a lot of years with institutions, the ones that were brave enough to leave the pie chart. Yeah, that's awesome, Todd. 12% is awesome. I know somebody's laughing at Meet Kevin portfolio. I did a interview with Kevin, I think in 23, and I thought we hit it off really well. I thought he would. He's a big influencer. He's got a giant channel. I think he's at almost 1.5 million. We could have just done amazing things together. I would have loved to hook up with him because we're pretty compatible as human beings. We had a good time. Spent about 3 hours that day. I did the interview, and we had a good time. I was in LA. I was on my way to Singapore, so I had to leave because I had to catch an airplane to Singapore. But let me just look here. Yep. Okay, I think I've covered a lot of this stuff. So Texas Dave. Yeah, I'm glad I saw this. So here's what's happening. I was just talking uh, to some folks today. I have some scripts which I should clean up and get them ready, and everybody that's on has WaveTech should have some of these scripts, because what you can do is you can just do a screenshot, put it into Claude, add the script, and I've already built capabilities of forward forecasting on the trades. I've talked a little bit on this channel on taking like the portfolio or the list from the research on expectations and do forward looking as far as how far out are these trades likely to mature, where are the mature points. So I built some script that not only with WaveTech, you can go and put it in there, put the portfolios in, it will start to forecast forward-looking returns. 3 6 month look pretty good so far. New dashboards, and all it takes is there's a couple pages, and what I've been working on is something that you can log in through another module, kind of a website type of thing, and you click on the functions, and it will go and log into your account and grab this information and then display it in some of these new ideas, which is intelligence and looking forward, probabilities of trades being good, monitored on a weekly basis, a whole bunch of stuff. it's sort of the rebuild of that platform. And the engine runs great. It's sort of like you've got the good engine, it just needs a new body, a new way to display some things, but it also needs some intelligence. And I was talking to an institutional client today, and this is something I just need to get focused. Listen, I'm not making excuses, but the last couple of years of my life have been disastrous. So I'm coming out of that. I've worked on a lot of things, just haven't been able to tie everything down. So working on an environment where I can get some maybe from the community, but otherwise we're able to put some of these ideas and work on the script, because I know I've talked to a couple of people over the last year and a half, and my life just kept getting disrupted one after another. So now I'm just dealing with the aftermath of a lot of carnage in the rear view mirror. So once I get all this stuff cleaned up, I've got a project that hopefully by Monday is going to relieve a lot of time. It's been the main draw on my resources, which is one person. And so once that's out of the way, I should be able to start to reallocate things. But great question. There are some things, and in fact, that's something else we should do I need to get the WaveTech community together, and we need to brainstorm, because there's a lot of things I can show you that you can do with Claude that you can do yourself, and it will give you some great insights. All of this, by the way, since we're talking WaveTech for a minute, I'm running over 10 minutes now, but all of this requires you to do every trade or update the model or the portfolio model to match what your trades are. And once you do that, then all these metrics are crazy cool and good, but it does require discipline, like complete discipline to the master, which is WaveTech, and when you build portfolios. A lot of people have used that thing for years, just as, here's a buy and sell, and then they do their own allocations. Well, the allocation system is the magic of WaveTech, and it only works if you do all the trades that are suggested. So if you look at we looked at that miners, you can see how it was just floating around. Then once it took off, you got to do all the trades, the size, allocation, everything. Once you get to the discipline of that, which is the hardest thing you're going to ever do, because it's black box, you sort of kind of know what's going on, especially if you have the indicators. But just to be able to adhere to the allocations, the trade sizes, everything matters in that platform. And we've only seen a few people be able to get close to true discipline, other than myself, to run that. So I've got some ideas and plans in the future for that. So thank you so much. That's a great question. I don't think you'll have to rewatch the previous screen. I went through gold. And I did gold and silver, so you missed the party. I don't think you were here earlier. Anyway, appreciate. I know everybody was hanging around waiting for you to get here so you could tell them where it was going. Thanks a lot. Anyway, I'm being a bit of a troll here, but so just remember, it's my channel. I'm being silly. Anyway, we do have community rules that talk about the content that's on here. So I know there's a few Smurfs around, but I'll leave that alone for now. I ran over, was trying to be on time, but at least we didn't crash tonight. Nothing locked up, so that was good. That was all on me. I should have a sign, reboot this computer and clean it every few. The Mac is so stable, it'll let you build until it breaks. And that's what I did. I've done that before. I built until it broke. Anyway, folks, thanks for hanging out all this time. Great questions. And, always doing the best to get some information. Multiple lessons all through this thing. So if it's worth probably catching a few of those tidbits on trends and PPMs, a whole lot of stuff. They're always embedded in there, so I'm forcing you guys to spend an hour and 14 minutes to get the goodies, but you never know when they're coming. All right, folks, thanks again, and I will talk to you soon. So out to your favorite music, and I've got the beginnings of the new music, so I may have like a music session at the end. We'll see how it all plays out. Have a great evening. Talk to you soon.